Today is the 31st, last day of January, ending the month. We're going to try to decide. This is a target rich environment, Blake, and we're living in it. So the question is, have we hit the target this week with some of the data? We'll talk about GDP, Fed policy, miss, make. Did they hit the mark? Gold probably hitting the mark right now in terms of performance, earnings flips, and we'll get to our Bulls and Bears.
Sounds good to me. That advanced GDP, I talked a little bit about this in yesterday's video and the details of GDP. So for those of you that are not familiar with GDP reports, GDP is the largest, broadest measure of economic health for any economy. Gross domestic product shows you how much did you make of all the stuffs. But advanced GDP is the first one reported. It has the biggest impact, causes the biggest moves in the market. You have advanced, preliminary, and final. So final is more accurate, but advanced, and so advanced has a lot of adjustments that can be made along the way, but it's the one that causes the market to react the most. So people treat it as the most important of those three, even though it's maybe the most flawed because it's the earliest on.
Yeah, and that's the thing is that, I mean, we're kind of trying to gauge, okay, what does GDP tell us? Now, here's the deal, folks. I mean, GDP is kind of a junk stat, right? I mean, you go back to second quarter 2008, we had a 4.1% GDP in that quarter. And later on, we found out, oops, sorry, it was not plus 4.1. We were in recession. So, but there are some kind of key takeaways. And I kind of did a little summary here of some of the data points. There are some key takeaways that may see economic weakness. So, Blake, I mean, what were some of the areas that really added to GDP in the advanced number?
Well, I don't have my chart up here from what I were looking at,
Oh, okay.
but go ahead. You got the
So I'm
numbers
kind of
right
doing
here.
two things at once. But
Yeah,
yeah,
trying
so
to answer the YouTube channel too. So.
yeah, I know we're like I'm posting some PDFs that I had sent on Monday or Tuesday rather, because we're doing kind of a strategy. But one of the things about the GDP, right? We actually missed analyst estimates at 2.3%. Was a deceleration from 3.1% the prior quarter. Consumer spending. This was ultimately the area of surprise. We saw a pretty big bump. I think it was over 4% addition as far as from the GDP perspective, due to consumer spending in the fourth quarter. Now, was that the Trump bump that everyone's kind of expecting? Maybe we're suddenly more wealthy. No. More debt. Yes. Investment decrease, which partially offset the growth. Imports were still record high in terms of trade deficits, but it did come in just a little bit. Price index. So this is one area that's of concern, right? Powell seemed to think that we're kind of on the mark in terms of the trend and the price, and PCE was 2.3% compared to 1.5% from the previous quarter. And annual GDP growth for 2024 is 2.8%. So one of the biggest additions here is obviously government spending. When you look at the data, look at some of the information from yesterday, they're wanting to cut a $2 trillion deficit to $1 trillion through attrition, through austerity. Blake, what does that do to GDP?
Well, when it's first off, when we're talking about the spending of government spending, it used to be 16, 15, 16, 17%, and it got as high as 23% at one point, depending on how you account for the numbers. But we're talking about the total view of the GDP, and it's 23 million. So what is $1 trillion off of that? About 4 or 5% drop. So if we cut $1 trillion of spending, we're talking about a 4% decline. Now we take our current GDP percentage growth and say, if we're barely at 2% and we cut 4% out of that, we go negative. There's no ifs, ands, or buts that it goes negative, and it sets us up for what we call a traditional recessionary move, where we're going to have 2 negative quarters in a row.
And the thing about this is like, look, I mean, GDP in of itself, this is by the time you see this turn, you're in recession, right?
Yeah.
So,
It's always
so the
late.
idea is this is
by
not a
by
leading
6 months at
indicator.
least. 6 months at least late.
Right. I mean, we're talking about a very, very lagging indicator. You can see growth and you're in recession. You can see recession and you're not. I mean, you can see recessionary pressure to GDP and you're not. The idea of cutting spending, I think, is net positive, but not when we're considering government spending being a source of growth. But the reality is, look, the market's benefited by the massive spending with which we've engaged in.
Mhm.
over the last 4 or 5 years that's encompassed really two presidencies. And so, if we are truly curtailing spending or curtailing the degree of handouts, I mean, we are going to start to see the supply of money start to come in a little bit from where we currently stand. Even though credit conditions are expanding right now, we're loosening credit conditions as the Fed is on hold this week. And so we think about Fed policy missing or making the mark. I mean, what did you think overall about the Fed announcement this week? I mean, we saw that the ES, we're generally moving higher on some earnings, but we're not really moving wildly at this point.
Yeah, and you and I did the Fed Live, and I don't like to be a critic because I try to just be I try to be data dependent like they're supposed to be. But it was so much double talk. It was so much speaking out of both sides of the mouth. It was not convincing to me that they have this under control. And he was off on his numbers, and he would say we're above this, but then we're below it the next statement. So it was not great. And it did look like that there's a little bit of flailing going on. And did you see PCE this morning? It was like we talked about, inflation is holding up. So we have growth slowing down, inflation holding up. And before we cut rates because they seem to be focused more on employment, now they're leaving them set because they seem to be more focused on inflation, which we saw in the movement in gold.
Yeah. I mean, they're in a very difficult position. I mean, obviously, I mean, Powell, I mean, I guess the only positive from Powell is that he didn't step in it, right? He didn't like say something that really spooked the market. If you think that's good or bad, I mean, ultimately, what they're in a position right now is that they just don't know. But what he didn't do, he was failed to offer any sort of opinion, right? He just didn't want to delve into anything. And so, as a function, I mean, are they supposed to be independent? I don't know, but the idea is that right now, what is the inflation outlook? So again, we're going to February 1 tariffs. Canada, Mexico, 25%. We're talking about tariffs in Taiwan. We're talking about incrementally increasing tariffs 2.5% a month until we get to a 20% mark, and they can negotiate with us to try to lower it based on certain policy measures they want to achieve. There's a lot of uncertainty. So when I look at that, I say, look, I mean, the Fed doesn't want to talk about it. They don't know what their policy is. They're data dependent. What's the data going to be? We have no idea. There's some big changes. And don't get me wrong, these could be really positive changes, right? But what it does do to the traditional measures that these policymakers look at, it does create a source of confusion. And probably a lot of their default positions are probably wrong in terms of how they interpret them anyway. So as I look at the market and I just see how we've been just grinding here for the last over a month, I mean, look, this is the world we live in. There's a lot of uncertainty right now economically brought about by really bad policy for an extended period of time, really since 2020 and beyond, even 2019, with the overnight repo market expansion on the Fed, bumping their balance sheet to $9 trillion and scaling it back only a little bit before raising rates to very high levels. Just realize I'm like, this is not the same. I'm not sure you can apply the same playbook of just buying stuff and expecting it to go up, right? I think this is
Now,
a very
Brendan,
different mark.
yeah,
And
and
if you saw
Brendan,
Nvidia this week, it's a big deal.
you're a smart guy. And I always appreciate doing these sessions
Smart
with you.
A.
But there, yeah, but there. So really quickly, I think this is a point that I don't want to just gloss over because you talked about the repo market and expansion of the balance sheet and raising your rates within the broadened balance sheet. You and I understand what that means. You and I have
Yeah.
talked about this in detail, but why is that an issue to you? Why is it
Well,
that
so
the Fed increasing their balance sheet? Because there's a lot of people that don't necessarily understand why the balance sheet has to be reduced or expanded or how it changes and what the difference is. There's a higher interest rate when the balance sheet is wide or big, and what it means to treasuries and US debt borrowing when the balance sheet is big and versus higher rates. So break that down really quick.
well, so as the Fed expands its balance sheet, they buy stuff. And when they buy stuff, they put dollars in the market. They pump $5 trillion into the system in a little bit over a year. So I saw a little video by Thomas Massey, but yeah, I use the analogy of chocolate milk. I say, so sometimes you buy a thing of chocolate milk, the Dairy Gold from Costco, right? And you drink a little bit of it. It's pretty rich. You can add a little bit of milk to it. It's not going to really taste much different. But I said, what if we just keep doing that? So now all of a sudden we got a little bit of chocolate milk and a whole lot of milk in there. does it taste like chocolate milk? And to a 5-year-old, when I first kind of explained to them, no, it's not going to taste the same because they've tried it, right? So the point is that look, as we dilute the value of our money, right, it can have a positive effect on the market, but it's only a mirage, right? It creates inflation as there's more money in the system, and as banks take that money that they receive and lend money on top of it, we expand it. And ultimately, we create distortions. Those that have access to that money first benefit the most. And, we had a lot of policy in 2020 that really allowed for mega cap, Mag 7 companies to benefit greatly. So if we're now talking curtailing policy, drawing down the Fed's balance sheet, we're draining the pool. And ultimately, I think Apple's going to be higher today, but Apple's one of my poster children for, hey, tariffs, draining the pool. Apple is vulnerable to the downside, even though we are kind of pointing up here about $9. So, again, just the playbook's changing. We got to adapt with it. And so that's what we've been trying to do, Blake, in this session for the last couple months.
Yeah, and as far as when you talk about money supply, money going into the market, we had the biggest spike in money supply and the biggest year-over-year collapse of money supply because we'd become so adjusted to that higher inflow of capital. They didn't have to pull it out of the market. It was just the rate and the available money was out there already, and there was no additional money going out there. And then the Treasury, you got to remember that as we do debt, as we keep issuing more debt in the United States, if we're issuing it at higher rates, it means our cost of payments is higher and higher and higher. We're paying $400 billion now a month in interest, and it's going to be the biggest single item on the U.S. government budget. So it's a problem.
Yeah, and it's Terry says Apple sales only grew 5% per year. I think I read the stat yesterday that their revenue is only up 2.3% from 2022. So, Apple is not a growth company. They demand a massive market cap. They have a very high valuation. How long can they be sustained at these levels? We saw with NVIDIA that eventually valuation starts to matter, right? You get spooked by DeepSeek and all of a sudden the stock's down 17%. We've got earnings coming up here in a couple of weeks, but few weeks, we're just grinding it out right now below support. You start to break 116, we start to head lower. Now, as our Mag 7 stocks are declining, gold, right, is kind of hitting the mark right now. So, kind of hit this inflation story and the Fed, whatever they discussed on Wednesday, hawkish, dovish. I would say they're probably slightly more dovish than hawkish, but gold yesterday was up nicely, going GLD going from about 254 to 258, up about a 1.5%. And frankly, was one of the top performers yesterday. If we look at sector leadership, I think only state utilities and real estate were higher in performance yesterday.
Yep. And anytime I talk gold, I always tell people pay attention. Yeah, both utility staples were both did well yesterday. But as far as anytime I talk about gold, pay attention because I'm not a gold bug. I don't love gold. I think it is overly. That's right. So when I talk being bullish gold, and I have been talking about being bullish gold with Brandon for weeks and months now, there's a reason why, because I'm not a buyer of gold just because it's always safe. Now it isn't. And so this is a great opportunity, and gold is breaking out to the highs, and it looks phenomenal. And I don't see any stopping of this as it clears the 52-week highs. Yeah. Well, all-time highs. So.
Well, and again, you think about, what is kind of driving gold? Yesterday, I spent an entire session kind of talking about gold dynamics and kind of look at that, what is and what is not in terms of the driver for gold. Don't look at gold from a demand perspective. You look at gold from not a supply perspective. You look at it from a dollar perspective.
Yep.
If the dollar is losing ground in real terms, gold goes higher. And so there's a lot of risks for the dollar right now, right? Big changes in policy. We have a lot of dollar reserves out there. 50% of dollars are held outside the United States. Does that start to come home? Could we create again? So gold right now is benefiting, and it's also benefiting from seasonality. So seasonality typically bottoms in November, December, and generally rally through January, sometimes into February. But there's also bigger dynamics at play. So it's reasonable to want to be long gold. But Don had a silver trade, buying a call we sent out on 3 trades a week, closed that yesterday. But silver actually broke out this week, not to a new 52-week high or all-time high like gold did. It actually did break out at a multi-month high going back to mid-December. So, I mean, what's your take on silver, Blake? I mean, is silver going to play catch up here? Or is gold really going to be kind of the leader? What's your thought process on metals right now?
Well, I think it goes gold, like you said, is up here. Then you have silver, and then you have copper, and copper is going to be your demand-based core metal. Silver hasn't really been used as much as far as demand since we went off film. I mean, there's
Mhm.
that took away a bunch of demand there, but the ratio still is out of whack. And I do think that silver has some more upside. If gold just maintains here, I do think silver is going to try to catch up,
Yeah.
but never expect silver to trade in lockstep on the way up, but accelerate on the way down because
Yeah. And that's one
it's
thing,
just not held the same way.
right? And especially right now, I mean, because we're looking at, again, there's a lot of uncertainty out there. It's going to emphasize gold. But again, when you start to see if the market's performing well or reasonably well, silver will tend to outperform. Gold stocks will tend to
Mhm.
outperform as well. So like a GDX or GDXJ. So GDX did break out yesterday. GDXJ, this is your junior or smaller gold miners. They kind of cleared its last week high. So again, we're looking at the space. So if the market holds up, there is a chance for gold stocks and silver stocks to kind of play out positively. Now, Blake, you have Newmont Mining on
Mhm.
your list for a potential long play in the gold space. What's your target here on Newmont?
Yeah, Newmont, I'm actually looking to get all the way back up, but not that high.
No, sorry, I was
Simmer
looking at
down.
trying to draw my fibs.
Yeah, I'm looking in there around in the 50 in that gap area and to just kind of retest almost perfectly your 61%. So right in
Yeah,
there.
yeah, and this week there was some bullish activity in the silver space on AG. AG coming up sport has not exactly broken through yet, but there was significant volume building the last few days. Earnings are coming up on this one. Pan American Silver historically has been a very good. We think about the cost of producing silver. This stock did break out as we look at the kind of declining highs, declining lows. This ends up being kind of a falling wedge breaking out. Short-term target would be 26. That's $2 of upside from here. The
Mhm.
great thing about gold and silver stocks is they generally have what's called positive skew, meaning what? It means that when you look at the call story here, if you come in, you'll see that typically the lower strike price have lower volatility. We rise as we go higher in strike. You could buy 25 and 26, like a call spread, for example, in Pan American or Newmont. Let's take a look at this one. Again, you buy the lower strike, you sell the higher strike. Generally speaking, yeah, Newmont's not in there, but GLD typically is where you have lower volatility as you go just out of the money and it rises as you go further out. So you can buy here and sell there, and it creates relatively cheap spreads. So long call verticals are generally something you can play in gold and silver and some of the gold and silver stocks. Very low risk, high reward play. Just play it slightly out of the money for these kind of plays. If you got that kind of level three, clearance to be able to do that in your brokerage account. Like I said, Don traded the silver trade in our 3 trades a week, did well, close it yesterday on the breakout. But again, there's certainly more upside potential here in these as it continues. So gold's definitely kind of hitting the mark for now. Let's see. Let's talk earnings flips for a moment, and then we'll kind of turn our attention back to the Bulls and Bears. So Blake, some of the earnings flips for this week. So I put earnings flip into Copilot, and this is what it came up with. But
Everybody's
Cat,
so happy.
UNH, Apple, Intel, Visa. So we
Yes.
talked about Cat. You took a downside bet on Caterpillar.
Yeah. So the fact is, as we're looking at Caterpillar, UNH, were those were I actually left the ones off that were losses. I did want to highlight again with these because when you do take these trades and they don't work out, you let them go. We're not
Yeah,
trying to sell them for 5 cents, 10 cents, or 1 cent or anything like that. We
right.
let
You're
them
not
go.
buying back one side or
It
selling
is
one part of it.
literally, yeah, it is literally, it's like the name infers. It's kind of like a coin flip. We're either going to win or we're going to lose. That's it. There's no little win and there's no little loss. It's all lost or we hit these big wins. And so this is what we're looking at. And as you're looking at this, Caterpillar, and I always try to look at these from where the skew is and what the volatility is showing and what the market is trying to price in. And anytime we have a gap up, close down, gap up, gap down, close up, that shows me uncertainty, and it tells me that I can go directionally with where it's been before. But there's usually a little bit of skew that kicks in the last 2 days. So we did fade this one, and it's worked out great for us. It went down, hit our target. Same thing with UNH on the opposite side. We're just want it to hit that expected move on on the next day, preferably, but by Friday close. And so UNH, there it is on the way down. And, we're capturing these and getting 200%. Some of them we've hit 250, 300, 350. And we're just kind of set up for Apple today. Apple and, we have Apple, Intel, and Visa. Intel is probably going to be a dud. It's just, or no, Visa. I can't remember. I was looking at the
Visa.
pre-market.
So
Yeah,
Apple's up pre-market.
Apple's up pre-market. We're looking for it to get
Visa's
up
up
there.
5.
Yeah,
Not
so
a
Visa
lot.
and Apple are fine. Intel's probably going to be a dud. But if we can hit 1 out of 3 of these at the rates that we've been hitting these, we come out profitable. If we get better than 1 out of 3, we come out very well, and we can see significant gains in results over hundreds of trades. Like we guarantee the 15 trades in a quarter. I think we're already going to be at like 8, 9. So we're already
Yeah.
halfway through. But we're not going to, when we say halfway through, that's not true. We're going to give as many as the trades set up. And
Yeah.
so we're setting up the trades. We're going to hit as many of them that give us the trade signals. And that can be 5 a week for 7 weeks. So we could be
Yeah.
35 or 40.
And we talk about kind of, the conditions of the market just don't lend itself just to buy anything and have it go up. I mean, these kind of trading type stuff, earnings flips, the weekly butterfly trades on the SPX, in-out spreads. I mean, these are kind of trades that, again, you don't need the market to just grind in a certain direction. Again, these are kind of two-way market type trades because earnings truly is a two-way market. Now, I have kind of a theory on earnings that you get these like sell-offs like here. It's a little bit different because we ran up and sold off, so net not much. If you look over the past few weeks, is that look, I mean, if you see positive news, in this case, we kind of sell off, you might have a chance of jumping more. So we have kind of a result that maybe have more upside, less downside when you sell off or advance. So in this case, if Intel's news was negative and we're seeing basically we're the same as where we finished yesterday pre-market, the negative news may not be as negative, right? In Apple, Apple had a nice run, although we did see a sell-off and a bounce. We're up here about 247. And if we saw from Meta yesterday, I mean, these moves don't necessarily hold. So Blake, when you're
Mm-hmm.
doing these earnings flips, if it really kind of gets into that zone, do you try to capitalize quickly, or do you kind of let the volatility bleed out? Well, we lost Blake.
Oh, you're fine. So yeah,
Yeah,
when we see that, if it's already past your number, you just have to let it go. And so that
yeah,
usually means that if the volatility is bleeding out, if it goes over the top, the volatility has to bleed out. It has to go to 0 by Friday's close. And so if we go overshoot it, that's actually not a problem. You just have to be patient with it, because as the volatility starts coming back in and then we come back and trade past that, that's actually oftentimes the ones we get really big rewards because we've already gone past it and we're fading through it. Those can actually be a lot more profitable than even the 200%. And a comment was made about the two-sided butterflies. We do not do both sides. You're correct. You will always, that messes with your numbers. It messes with your statistics. It changes how you can close them. It changes all sorts of things of what you can do with those. And it just does not work. Do not
yeah.
try it. You have to pick a direction because of the way
These are
you're
not
playing the probabilities.
these are
That's
not
like
calendar
playing,
trades. These are
yeah.
butterflies.
It's like playing red and black at the roulette wheel. You would not do that because all you're doing is guaranteeing yourself that the double green and the single green is going to cost you. And so, yeah, we don't play both sides.
So in Apple, what's the middle strike on Apple on the earnings flip?
250, is it 255? Let me pull that back up. I had it right here just a second ago. I
So no
apologize.
expected move.
Yeah, so we were at no, that would be the other one. 250. 250
250
center,
is middle strike.
$5 wide. Yep.
Yeah.
250,
So I mean,
245,
you just look at
255.
this. You got 255, 245. We're really just jumping right here, right? 247
Yeah,
lower
that's
end.
oh, and 247 on the open is perfect
Yeah.
because if we get any drift at all while it calms down, because on the open, I don't care if we're right on 250, we can't close it. It's just not going to work. There's too much volatility in there. There's just it's not going to work. We need it. We need some time after that open. It needs to get past there and touch it after the fact. So we don't
Yeah.
really want it right at the open. It's just not going to work. Uh,
So normally what could you like half hour, hour after the
yeah,
open? What yeah.
as long as some of the volatilities come out and then we trade across that EM, that's usually when we get in the multiples, high multiples. So
Again, usually get that first initial, and then we just see start to see the volatility just work out of it quickly, and then you kind of
yeah.
fade into this area. That's a perfect spot for Apple here.
Oh,
And again,
it could be
Apple is one of those where
amazing.
we said the sell off. We had the bounce. It was kind of pricing right in the middle of the range. So I kind of talked about
Mhm.
yesterday. Are we gonna have more of a skewed result, or more of a balance? It's hard to say, but it looks more balanced here with the $7 expected move. We're basically almost nailing that, right?
Yeah.
So
And that
pretty good.
this one, if it plays out the way I think it could with where we're at, this could be one that would keep you profitable even if you had five or six go sideways. This could be a really big one. Could be.
Yeah.
We'll
Yeah.
see.
So anyway, so those are the earnings flip. So again, just stay tuned. We're still in earnings season. Is like Blake said, they've done 8 or 9, but we still got a lot of time left in the quarter. They're looking to send out as many as they can that meet the criteria of the strategy. And so let's talk bulls and bears here. So again, we think about the broader market perspective. Yeah, we talked about this on our Fed meeting. Again, overall, I think the bigger moves to the downside still. I think you agree with that as well. There's risk in here. And so as we look at the bulls and bears, again, taking into account this, you're definitely going defense here. Walmart, Costco, Lilly. We talked about Newmont, AG. So again, is this again part of that uncertainty theme? I definitely saw that Walmart some data on their website or their app traffic's up. People are trading down. Is that the thought process here?
Yeah, I think it is. I think it's substitution. I think it's consumer staples and substitution because we're looking at the market behavior saying that not only is consumer staples winning, but I mean, the joke being, of course, Target is the fancy one, but Target's not
Yeah,
going to new highs. Walmart's breaking out on decent volume. And Walmart's app and the Walmart Plus or whatever they call it,
yeah.
um, yeah, that I mean, when I
They
hear
got
it
Sam's
from
Club. I mean, my goodness, what do they have?
yeah, Sam's Club's garbage. Anyways,
Yeah, I got both. I got Costco and Sam's Club.
I don't like Sam's Club. We're a Kirkland family. That's
I know you guys.
yeah,
You guys are
yeah,
Costco. Lord.
yeah. But Walmart's app has, I mean, when I hear neighbors and friends and family talking about that, they've signed up on Walmart. So very late adoption, but Walmart same day, Walmart Plus kind of stuff, and doing it like the Instacart type of behavior. It's I think it's huge demand and it's the downgrade for the cost, but yet you still get the same services, same day delivery, and they're winning. It's just
Yeah.
what it comes down to. And they have been
Yeah.
converting a bunch of their Sam's clubs that didn't have the traffic into these outlets like Apple, so they instantly have all these
Huh.
centers. And
Hmm.
they're, that my son's girlfriend does this. And they reward them for how fast they can pick and deliver and all that. So it's become huge.
Huh.
They it's just become a
Hmm.
big deal. And Costco, I just you can't not like Costco. We bottomed out, created higher highs, higher lows. I think easy targets to the previous highs, but I don't see any slowing down for Costco.
I mean, if we kind of continue through with this channel, I mean, 1,050 maybe in the next few
Yeah.
weeks, possibly, right? We're kind of grinding along this support level here, broader channel. So we've seen more volatility in Costco, but it's honestly a bad thing off lows. You might have bigger swings the upside. Um, so Eli Lilly, LLY. So is this an Ozempic?
I don't know. This is purely dealing with the defensive sector stocks. So consumer staples, utilities, and healthcare. And I really like that breakout with a V-type reversal. And I know earnings are coming up, but I think we're going to fill that gap way back there at 920, 930, somewhere. It looks really good to
At
me.
900?
Yeah. And I'd go to the close price there a little bit higher, but yeah, 915 maybe. So I like it. I think it's a really good breakout. And it's pure technical in the sector. That's all it was. I wasn't
Yeah.
getting into fundamentals on this guy.
So I threw a few in here. So one of the stocks I talked about last week was Baba. It was one of my
Hmm.
Magnificent Seven, Magnificent Formula, Magic Formula stocks. It's had a huge move here. Now, Baba announces February 6th. That kind of moved on here from yesterday. But Baba, again, this was a play we kind of talked about back on the 9th. So kind of down here at support from a value perspective. I talked about last week. Big move this week on the AI information. This is one of those stocks that, again, you may look to sell into strength. Our 61% is 105. You may take some profits in BABA right now. But the idea is, could we go to 117? Absolutely. But be prepared. This is a big move. It's a Chinese stock. They're typically flashes in the pan, and we've gotten some flash. There could be more in this, but just be careful if you're trying to stretch it for 117.
You know, let's
If
think
we
the
look at
Baba
the
sells DeepSeek.
right. Well, they have their own AI thing. I mean, you do see positive all skews. So you could substitute stock, just take a swing on the call spread like a 103, 105. These are pretty cheap spreads in here for a $2 wide. You might pay like 65 cents. So
Wow,
you
that's really
could
good.
sell the stock, just kind of take an upside spread. 105, 107, you get to 107, roll it to 108, 110. Just keep moving it up. Because I think the easy money on Bob has been taken here with the news on DeepSeek, and it's got here way faster. Earnings coming up here in about a week. So be careful on this one. Again, you might transition if you own stocks, sell it, take some of the profits, just take a spread in here. And if you're able to get any more out of this, you're going to be able to capitalize on it with very little risk. Pinduo Duo, this is one that was on my tariff list. So again, we haven't issued tariffs yet. We got Feb 1 coming up. They're in a space that's generally a little bit isolated from tariffs, but it is a Chinese company though, right? And so again, it's not as much effect here. We're looking at a target of about 133 on it. Again, more volatile. As we think about telecom's not as affected by tariffs. So again, AT&T, nice breakout here. TMUS had a great week on its earnings, huge gap here as well. So I talked about some entries on my session on Tuesday for AT&T. Um, Hess, again, this is somebody careful watch list again. Are we going to protect oil industry, midstream companies? KMI had some significant option activity yesterday. So again, we may see a little bit of swing. That's a midstream, but Hess does a lot of LNG as well. So again, we're kind of looking at support here. They just paid the dividend, or 1x dividend rather, but I'm looking at a target up here retesting 165 in Hess. And I'm going to talk VIX for a second, Blake.
Okay.
So
You only
I
got a
still have a
second though.
lingering VIX spread 122 32. We played it back here on this swing, did really well. It was up 200% winner on that. This week, we did see some significant activity yesterday and the other day on the VIX. And what this is, the VIX goes opposite the market. So if the VIX goes up, the market's generally going down. And what you saw out here was this being built at 30 and 60. So we had
Oof.
about almost 300,000 contracts over a couple of days span, buying the 30s and selling the 60s out here. Again, is this a hedge? Absolutely it is. But it's also a really cheap trade if you want to swing for the fences by March that the VIX is going to break out above 30. So
That's
again,
looks
I
like
got
the
one
old
at 22,
the
32.
50 cent game that guy used to do. He kept buying 50 cent way out of the money calls.
Absolutely.
All he has to do is one time connect. He's
And
dislocating his shoulders and his elbows every swing,
yeah. And
but
these kinds of spreads, they're not a great direct hedge against the portfolio, but they are a good kind of a supplemental hedge to add in some stuff. Now, Blake, you're bearish on Microsoft. It had a bearish break. We're going to end here in just a sec, but bearish breakdown. So you're expecting more follow through?
I did,
390?
yeah,
Looking for
I
something
need four,
bigger?
and I do need 410 cleared. So I just that
Got to
sell
break
off after
410.
earnings. If we follow through to 410, I think you have a free fall back to the annual lows.
And I like the home builder trade, DHI, Toll
Fading it.
Brothers. Do we need to see the break here, or do you?
Yes. I just yesterday. I don't even need the rest. I just want yesterday's low cleared.
So
Um,
just yesterday's low cleared.
just yesterday's
Okay,
low. Yeah, I
we're
did
right
think
there
with
knocking the
interest
right
rates
price. Yeah,
staying where they're at, I think this is I think this is an artificial bump, and we already saw DH Horton fail on their earnings. Toll Brothers is overpriced, and I think you're going to
yeah.
see a rug pull.
And real estate, it's been holding up here again. I were some bearish option pulses trades yesterday. Again, I'm looking for this kind of retesting low. But again, you're looking for break if yesterday's low as a trigger, or just kind of playing to the high, buying out of the money spread. Just look for this thing rolling back to 90. All right, well, Blake, we got to wrap it up. We got to pass it to Don.
Yep.
But any parting shots, comments, etc.
No, the intraday swings have been crazy wild and aggressive, but the big daily moves, no, not big. It's actually quite small.
Yeah.
So just be aware we have a lot of intraday volatility. You and I, if you feel a little confused, the market is confused, and that's why we have small daily net difference, but huge intraday volatility. So just be careful. Like you keep saying, Brandon, keep some of the powder dry, be ready for the trade to come when it comes, but don't be too aggressive.
Yeah. We'll catch you later, folks. Thanks for joining us. See you, Blake.
Thanks. See you.